Hi, this is Ricky Madatu, and I'm here to share with you a quick summary of the markets for March and our outlook for the second quarter. Last month, we saw quarterly rebalancing flows from both local and offshore investors, erasing most of the gains of the PSEI index. This left the market just shy of 6,500 or right on the 200-day moving average. For March, we saw foreign outflows amounting to $88 million, bringing the year-to-date figure to $518 million in outflows, causing the market to lose the gains we saw back in January. Dividend stocks led the gainers for March as PLDT up 10.5%, DMCI up 8.9%, and Semirara up 7.8% declared large dividends alongside recovering some ground from their sell-off in the previous quarter. On the other end, Converge down 21%, Monde down 18.6%, and AEV down 10.3% led market losers on company-specific weakness. Now, sentiment fell flat following contagion fears from the global banking system. Locally, however, earnings continue to shore up our confidence in the market. On a consolidated basis, full year 2022 earnings, for those that have reported already, clocked in at plus 32% year-on-year, beating our expectation of just 25% year-on-year growth. This has been led by our core picks in banks and power, with some surprises in property and consumer. On macroeconomic data front, inflation continued to surprise positively, although still at elevated levels, limiting possible shifts in tone from the BSP. March inflation printed lower versus last month at 7.6% year-on-year, or down 0.25% on a month-on-month basis, as food and fuel prices started to normalize. The BSP is set to remain status quo in maintaining at least 100 basis points difference to the US Fed in their benchmark interest rate setting policy. Now, overall, we think that the equity markets will remain sidelined and trade range-bound between 6,400 to 6,600 moving into the second quarter, amid still elevated inflation and interest rates. We actually downgraded our year-end fair value estimate for the market to just 7,400 from 7,800 based on a 14 times 2023 PE multiple and 10% earnings growth expectation. Now, we think the key strategy for investors in Philippine equities is to be very selective on exposure and to stick to select sectors that would benefit in a high interest rate environment. Thank you, and we hope this quick market update will prove helpful as you go about your investment decisions. See you again in a few weeks.